Alright, so I'm going to show you how to look for the setups. If at any point you get confused, please make sure you rewatch the video. The reason why you're rewatching the video is because you want to understand the concept, okay? If you don't understand something, just pause it and start over or rewatch the part that you can't understand. So let's get right into it. The very first thing you want to look at is the 15-minute chart. Why? Is because this is where you'll be looking for the gap. Now what gap? It's an imbalance between the first candle and the third candle. So I'm going to draw it out. Okay, I'm going to draw two types of gaps. Okay, so the first one will be, let me just draw it. So the first one is going to be a bullish gap. Okay, so if I say a bullish gap, you know what to look for, and if I say a bearish gap, you know what to look for. Okay, now let me, for some reason this one was a little bit too, okay. Now, so here's the first gap. This is a bullish gap. Now let me draw a bearish one. And I'm gonna just draw a different color, just so you understand. And want it. Okay, so where is the gap? The gap is between the first candle and the third candle. So for a bearish gap, it's the low of the first and the high of the third. The space between that is a gap, okay? So for example, how you would manually draw, you have the indicator ready to draw it, but how you would manually draw it is like this. So this is the gap, okay? And now I'm gonna make it settings, we'll make it white for the gaps, okay? Like that. And we'll draw one gap right here. So this is the gaps, the imbalances, okay? Between the first candle and third candle. So this is what you're looking for. So this is the bearish and this is the bullish. So if you're a bearish bias, like you think the day is gonna go down, then these are what you're looking for, these type of gaps. If you're bullish for the day, think it's gonna go up, this is what you're looking for. Now, where do we see this on the chart? Let's look at yesterday, which is Friday the 12th. You see it right here. You see a gap right here. If you were bullish, this is the first gap after market open. So you start scanning after 9:30. So 9:30 was right here. And as you can see, none of these candles provided this right here until here. But did price trade back into it? No. So you didn't have a trade there. Now, I'm going to go ahead and delete this, and we're going to find a day that price did trade into it. Okay, so we found one, and it was Thursday. Now, Thursday, are you bullish or bearish? It's okay if you're bullish because there's a gap here. It's also okay if you're bearish. There's two gaps here. Now, let's see which one would have worked out, because obviously we know this bullish gap did not work out because price went down. So you're not only looking for the gaps, okay? This is just the first step. Look for the gaps, okay? Look for the 15-minute gap. Alright? Okay. Now that you know where the gaps are, let's take a look. What's the next step? Next step is to flip over to the minute chart. And what day was this? The 11th? So we'll go to the 1 minute chart and we will go to the 11th. Okay. We are here. And we could see that bullish 15-minute gap right here. Okay. Did price trade into it? Yes, it did, because obviously it fell. But what do we look for now on the minute chart? And I'm going to draw this out as well. So once we get to the minute chart, right, we're looking for price. If we're bullish for the day, okay, so remember, this is if we're bullish. We're looking for price to trade back into the gap, right? And once it trades back into the gap, we want to see a strong high broken. What is a strong high? Now, remember what a swing low and a swing high is, right? Here's a swing low. I mean, a swing high. So this is a swing high I'm drawing. This is a swing high, and obviously a swing low would be like this over here. The reason why this is a swing high is because the middle candle has a higher high than the candle to the left and the candle to the right, and a swing low has a lower low than the candle to the left and the candle to the right. So these are just swing high and swing low, but that's not what we're looking for price to break. We're looking for price to break a strong high and a strong low. So what is a strong high and a strong low? Well, a strong high would be considered when there's a swing high, right, in the middle, and then there's another swing high to the right of it that has a lower high than the previous swing high, okay? And also, it has a lower swing high to the right, okay? And what this would look like on chart, and then price would continue going up, and so on until it made another, and then it came down, made another swing high. So this is 3 swing highs, right? The middle one is the strong high because it has a swing high to the left and a swing high to the right. So this is a strong high, okay? So if you don't understand, rewatch the video. So this is considered a strong high. Now, why is this significant? Because when we get to the minute chart, we want to see price trade back into the zone, right? Since we're bullish on this day, we want price to trade back into the zone, then break the strong high. Where is the nearest strong high? Well, if you're looking at the chart, the nearest strong high is this candle here because it has a swing high to the left right here, swing high, and then also a swing high to the right. So this is the strong high. Does price break that? No, in fact, it keeps dropping. Once price closes below the gap, it's no longer valid, okay? The trade is no longer valid. So we're not looking for price to break the strong high anymore. We are now, if we went back to the 15-minute, we saw it created this bearish. So now we could just delete this one to not get you confused. Okay? We have this 15-minute sell gap, right? And what do we see here? We need to see the gap form on the 15 minutes. So this is the gap from this candle here to this candle. This is the 15-minute gap, okay? Now, we see price trade back up into it, right? Right here. And then, step 2. What is step 2? We want to see a strong low broken. What is a strong low? This is a strong high, right? Where it has a swing high to the left, swing high to the right, and then the highest swing high is in the middle. So a strong low would be when it has a swing low to the left, as a higher swing low to the left, and a highest swing low to the right. Okay? And where do we see that? We see that right here. This would be, or even actually, the strong low would be this right here. Why is this the strong low? Because it has this swing low here and this swing low right here. Do you see that? So it has one higher swing low because this low is not lower than this. Okay, so this low is the lowest low, and it has one swing low to the left, one swing low to the right. This is this is what we want price to break. And price breaks below it. And what's the third step? The third step is to find an imbalance on the 1 minute chart. And where do we see that? Right here on the candle that broke it. If we don't forget what the imbalance is. Basically just a gap. Okay? So we see a 1 minute gap right here. Now what are we waiting for? When price makes this, right? We just want price to come back up into the gap. Okay? If it's too big, you could do the 50% line, but the gap, 50% of the gap would be, if I just anchor the fib right here, we could tell the 50% is around here, but I could just do this, and you could see the 50% is right there, but I'm not going to confuse you too much. You could take the trade as soon as it hits the gap, or 50%, and then you do the profit taking, right? The profit taking. So this is the marker right here, and we're doing short position because this is a bearish gap. Okay, when it's a bearish gap, you're looking to sell. So the short position, and you're putting it right where you would have entered. So in this case, we would have entered at the 50%, right? Which was right here. So we first click the position right at the 50%. And then we drag the red side to our stop loss. Where would our stop loss be? The previous candle before basically the high of candle number 1 of the gap, which is this one right here. Okay? And where's our take profit? It's a 3 or 2R, and we have the 3R right here, as you could see. So if I just delete this line, and let me fast forward this and explain one last time. Okay, we go on the 15 minute first. Where's the 15 minute? Okay, and what we're looking for is an imbalance or a gap, okay, in price. We see, and this is what a gap is, or an imbalance. This is a bullish when it's going up and creates the gaps on the upside, and the bearish gap is when it creates on the downside. So if it's creating bullish gaps, you're looking to buy. If it's creating bearish gaps, you're looking to sell. What do you want to see when it created a gap right here after market open, right? There was a gap right here. You could see it right here. And then price came down. So you're still marking this, right? Because this didn't happen yet. It was just like this. You mark the gap and you're waiting for price to come into the gap. It comes into the gap the next candle. So what you're doing is you're going on your 1 minute, and then you're looking for the strong high to be broken, because this is a bullish. This is a bullish gap. So you're looking for a strong high to be broken, then price comes back down into a 1 minute gap. But that didn't happen. Price continued going down, and what did it do when it was going down? It created multiple. You could say this is a gap too, right here. Okay? The reason why I didn't draw this one out is because you're gonna keep drawing the gaps, okay? And when price comes back into it on the 15-minute chart, right? When price traded back into the gap right here on this candle at 11:30, that's the only time you switch to the 1 minute, when price trades back up into the gap. It traded back up into the gap, right? 11:30. Let's take a look at 11:30. So right here, 11:30 candle started right here. So then this is the 11:30 candle on the 15-minute. It went up into that 15-minute gap right here. Okay? Once it did that, what are we looking for? We want a strong low to be broken. What is a strong low? I just explained it a little bit ago. A strong low would be when there is a higher swing low to the left, okay? And a higher swing low to the right. Okay? So it's a 3 swing low pattern. The middle swing low, just like this, has to be higher than the swing low to the left and swing low to the right. And where do we see that? We see that right here, okay? it had a higher swing low to the left and a higher swing low to the right. It doesn't matter how many candles it took. It could have been this swing low, right? And then this swing low and then this swing low, or it could have gone up and created another swing low. But as soon as it breaks the first strong low, okay, we're looking for another gap on the 1 minute, which we had it on this candle that broke the swing low. So we're looking for price to trade back up into it, and we're either going to take the trade as soon as it trades back up into it and look for a 2R, or we're going to wait till it hits 50% of that gap and then look for a 3R trade. And how do you plot your risk reward? Well, you mark where you would enter the trade. If you were going to enter it as soon as the gap started, this is where you would mark it. You would take the short position, one, because obviously we're going down. We put it like that, right? And you're putting the red one right above the first candle of the gap, because remember the gap is a 3 candle pattern like this. Okay, so the first candle was this one. You put the top of the red right there, and you go 2R, because this is where the thing was, the gap where it started, and you would have taken profit right there. Or you move the you put the entry right at the halfway mark of the gap, right? You enter there and you take a 3R instead, which should have been down here still. So there would have been your trade right there. Perfect. That's it.